It's time to check your money with America's money maven, Vicki Brackens. Vicki Brackens is president of Brackens Financial Solutions Network, LLC, and a registered representative of LPL Financial, member SIPC. Vicki, how you doing?
Doing great, George.
Go ahead. You go ahead. Okay. We're both anxious to talk.
Really pumped up this week.
Yes, we are.
It's that time of year where everybody's celebrating things.
It's the unofficial start to the summer, correct?
Exactly. And for us, I'm really happy anytime even if it's unofficial start of the summer. But it's, as I said, it's a time for celebrations because we've got lots of graduations going on. Okay, every place you turn, you see folks with their caps and gowns and how proud their families are. And
you know, where we originate this conversation is the mecca for graduation photo opportunities.
That is true. Okay. Right around the corner.
Oh, my God. If I can get in here, you probably, did you see?
I did.
Yeah.
I mean, you got the lines and you got
everything.
Police officers out directing traffic.
Because people just want to get their pictures taken around here.
Exactly. So speaking of graduations,
yes,
I'm sure everybody by this point in time has had an opportunity to see some of the things on the news about an amazing gift that was bestowed upon the graduating class for 2019 at Morehouse College in Atlanta, Georgia, by Robert F. Smith.
Well, maybe they didn't.
Well, just in case they didn't, I'll put this, what they call shameless plug.
Right.
I'm going to tell everybody to go to the Cornell Sun.
Yes.
CornellSun.com and read the amazingly well done article written by Miss Amina Kilpatrick.
Yes.
There where she is attending school. Is she the editor now?
Yeah, she's one of the editors of the Cornell Sun, yes.
Okay, so as an editor of the Cornell Sun.
Cornell University Sun, yes.
Cornell, thank you, University Sun. But
no, I'm sorry, it's Cornell University, it's the Cornell Sun. I'm just saying it's a paper of Cornell University. That's all I was saying.
Can you tell he's a proud father?
Yes.
Gotta get all those plugs.
Just get it all in,
Make sure we get that exactly right.
Right.
But for those of you who don't remember, I think it was probably mid part of last year, we did a little bit of an expose on Mr. Robert Smith.
You hit me to him because I wasn't aware of him, and at the time he had given Cornell. Well, first of all, before that, you hit me to who he was,
right?
And then he had also given Cornell a very large gift. They have a school named after him.
Exactly, there in the engineering school.
Yes,
and he is the most wealthy black person, African American, on the Forbes 100 list.
Mm-hmm.
And actually, as they said, and I'm not sure if I was happy about the way they said it, he dethroned Oprah for the #1 spot. Okay,
and he's a hedge fund manager.
He's a hedge fund. Okay, in fact, he has about 147,000 employees now through all of the hedge fund operations, as far as the companies that they have represent in the portfolio.
And what did we say a hedge fund was?
A hedge fund is a type of investment fund. I'm going to go back to that
in a minute.
Because if we do that now, we won't have time.
Go ahead.
But anyway, Mr. Smith stood before his class because he got an honorary doctorate from Morehouse last week, and he made an announcement which just floored everyone, which was, this is my class, the class of 2019, and 8 generations of my family have been in this country, and we are going to endow a gift that would pay off all the student loans for the entire 2019 class there at Morehouse. Now, I'm sure everyone is floored by that, but I thought I'd take just a few moments to talk about...
You're going to break it down for me.
...what that gift really means, because it totaled to about approximately $40 million in student loan debt. And we've talked about before exactly what student loan debt really has done to all of the futures, or what it can do to your future as far as having that type of debt that you have to retire over time.
Right.
There were about 400 graduates this year in the 2019 class. And what that really means is this, George. Roughly $434,000 a month in loan payments won't have to be made.
$434,000 a month.
Roughly $434,000 a month. Roughly $14 million in additional $14 million in additional interest payments
Won't have to be paid.
won't have to be paid. So a total loan debt that was retired was roughly $54 million.
Wow.
That now, instead of being paid out in debt payments, can be used to accomplish our number one goal, which is zero, no more. So to the Morehouse class, I am saying this to you. Mr. Smith, Robert Smith, said he is putting a little fuel in their bus.
Right.
No, he turbocharged.
Holla.
He turbocharged their bus, and they need to stop before they take one additional step and go out into the world and start working and look at the magnitude of that gift and the fact that that additional cash flow is now in their possession, and what can they do to deploy that additional cash flow to turbocharge their own communities and turbocharge their own families.
I know he wanted, and he also put a challenge out to them.
Yes, he did. His challenge was to make sure that the class following had the same opportunity. And they can do that.
They can do it. And then you think about from your perspective, you would also encourage them to look at what the amount of that payment was going to be and put that aside.
Exactly.
That's what you would say.
That's exactly what I'm saying. $454,000 a month,
right,
divided by 400 people means, or roughly 400 graduates,
right,
means X amount per month is now in your pocket.
Is the opportunity for cash flow.
Exactly. Is the opportunity for cash flow and the opportunity to do something magnificent in their lives. Now, somebody's going to say, well, Vicki, how'd you come up with that number? We went to calculator.net into the loan calculator.
Mm-hmm.
I did use a 10-year payoff because now we do know that there's some payoff schedules that run as long as 20 years,
right,
some that run as short as 10 years. We also looked at the average interest rates and looked at it at 6.5% because some of the interest rates are higher,
right,
some of them are lower. So we took an average of what we thought the interest rates would be. But no matter what, okay, maybe it's a little bit less or a little bit more, the amount of money that's still available is amazing, and we want to make sure that is picked up and utilized in their cash flow. By the way, just because Mr. Smith did it for somebody else doesn't mean they're going to do it for you.
I know that's right.
So don't sit around and wait to figure out how you're going to pay off your student loan debt. There are calculators and processes that can be used, and if you have any questions about that, feel free to give me a call at 315-930-4499. But George, before we get off the air, I want to go back to our first charge that we were looking at last week, which was, what have you learned?
What have you learned
over the last 2.5 years?
Mm-hmm.
And we stopped on question number 3, so I'm going to go to question number 4 and 5 today.
Okay. Mm-hmm.
Here's the question.
Oh, wait,
You're looking at the answers already, aren't you?
No, well, I am, but they're not circled, so I don't know what the answers are.
Okay.
Right?
All
I mean,
right.
it's just, right.
You're just following along with what I'm doing.
Right.
Okay, so here's the question. Some, but not all, of the money in a bank or a credit union account is protected.
That's true.
That is true. All right, then. You are correct this
I know
time.
that. I just know that.
All right. Okay. So for everyone who's following along with us, remember this. Deposits in federally insured banks and credit unions are insured by the Federal Deposit Corporation, or basically when you walk in, you see FDIC. And the National Credit Union Insurance Fund, which is NCUSIF, respectfully for up to $250,000 per deposit, per ownership category. It's important to understand what ownership categories mean. So things like single accounts, joint accounts, retirement accounts, and trust accounts. Neither FDIC nor NCUSIF protects against losses in stocks, bonds, mutual funds, life insurance policies, annuities, or municipal securities. Nor do they insure items held in a safe deposit box or investments in treasury bills. So the question was, some but not all of the money in the bank or credit union account is protected. The answer is true.
Yep.
All right. Let's go to number 5.
You know, I was a banker one time in my life. Did you not know that?
I had no idea.
Oh, absolutely. I was a branch manager at the Key Bank on South Geddes. That was the last bank. But before that, I was a roving assistant manager. And I went all over the county and some other counties and some other cities as well to do. So I was, I gave loans. I gave auto loans. I gave credit card loans.
Wow.
I did all of that.
Okay. All right, George.
Let me tell you how old, but let me tell you how archaic the terms were for the people that worked in the banks.
Okay.
The person who did like the certificates of deposit and safe deposit box, you know what her title was?
What was that?
Desk girl.
No.
Yes, it was. Ellie Janine Desk Girl. That was the name of it. So and this was back in the 80s. So that's not that long ago. Well, it was long ago now, but you know what I mean? It's not the 50s.
Right. It's not the 50s.
Just letting you know.
All right. Thank you, George. All right. So question number 5. Which of the following is typically the best way to pursue your long-term goals? Mm-hmm. Number A, investing as conservatively as possible to minimize the chance of loss. Number B, investing equal amounts in stocks, bonds, and cash investments. Number C, investing 100% of your money in stocks. Or number D, not enough information to decide.
I love how you keep saying numbers, but we're good. I think in this particular case, it's D. And again, I don't see the I don't have the answer.
No,
I mean, I know the
does not.
answer, but
He does not
I
have
think
the
it's not
answer.
enough information to decide, because I think the answer there is, what is your long-term investment goal? Because sometimes you might want to be higher in risk and sometimes and lower in risk and other times. So that would say not enough information.
All right.
Am I
George,
wrong?
for this week, you get 100%. You get 100% on your test, okay?
And I don't have the answers, y'all.
Okay, so it is number D, because to adequately pursue your long-term goals, you might consult with a financial professional before choosing a strategy, because you have to take several things into consideration, among other factors, and to put together a strategy that's appropriate for your needs. So yes, there was not enough information there. All right, well, George, basically looking at our time and
I'll give you one more.
you gonna give me one more?
Yes.
Okay, so
Because I want to do 3.
all right, then let's go ahead and do 3. Okay, here we go. Number 6. In debt speak, meaning in terminology around debt. In debt speak, what does APR stand for? A, actual percentage rate. B, annual personal rate. C, annual percentage rate. Or D, actual personal return.
Vicki, the answer would be C, annual percentage rate.
Well, after you told me the story of your banking career, if you got this one wrong,
I'll be in trouble.
you're in lots of trouble. So yes, APR stands for annual percentage rate. And this is the rate that credit cards and mortgages and other loan issuers use to show borrowers approximately how much they are paying each year toward their borrowed funds, taking into account all fees and all costs. Now, if you want more information concerning any of these topics or any of these questions or any things that we talked about today, feel free to reach out to us at info@Brackens, Brackens, FSN.com, or 315-930-4499. And George, today I'll say our plate is now full.
All right. Thank you very much. Vicki Brackens is the president of Brackens Financial Solutions Network, LLC, and a registered representative of LPL Financial, member SIPC.